All right, so today was a big down day in the markets, and the last whatever this whole year basically, markets peaked in November, December, January, depending on what market or stock exactly we're looking at. And I mean, certain stocks actually peaked like over a year ago, but the Nasdaq and the S&P peaked in November, December, I think maybe early January. I forget the exact timing, but lately we've been getting killed and. This is from the Market Hustle saying future millionaires are made or destroyed in bear markets. It's what you do or not do in bear markets that determine your financial future. So, what do they mean by this, or what I would say it is that selling right now is, at least in my opinion, obviously, again, my opinion, but selling is not a good idea. And we have a very unique market that if you go back, that this is very unique in that traditionally there has been safe havens, but right now there is no truly safe asset, right? If you look at bonds, bonds have gotten killed over the, year to date. I think the Canadian ZAG fund, the aggregate bond index is down like 13, 14%, which is staggering for a bond fund, right? That's huge. The S&P is down, I think about 15, 16%. It was down, I think 14 as of Friday, so maybe it'd be a little bit more now. Nasdaq's over 20, got to be like 25% roughly. So again, the stock market has gotten hit pretty bad. I mean, getting right into it here, I guess you look at oil is basically the only thing that's held up good, but oil's been relatively flat over the last couple months. I mean, the one investment that well, I mean, there is a handful, but personally, the investments I'm confident in the medium to long term. Short term, no one knows what's happening in the short term, right? It's very hard to predict the short term. But over the long term, I'm talking, year, 3 year, 5 year, 10 year, 20 year. Commodities are going to do well. I think it's looking like at least right now, when oil goes into the 90s, it seems like it's a good time to buy. So again, that's one area. Crypto, another one. You look at Bitcoin again over the last 6 months, it's gotten killed. But again, I think it's also a good buy right now because again, it dipped below 40,000 Canadian. I think it's at about 30,000 US. I know again people say, "Oh, crypto's risky," but it's like, um, who cares if it's risky? Over the long run's all we're worried about, right? I mean, look at the 5 year chart here, right? And again, that's only going back 5 years. Imagine going back 10 years. Like, look at, 5 years ago, we are what we're um, $3,500, and now we're at 40,000, right? So, when in doubt, zoom out again. We go to the S&P here. Again, 5 years ago, what were we at? 2,500 roughly, 2,400. Nasdaq, let's go over to the Nasdaq. Um, Nasdaq, we were at about 5,800. Like, again, so that's more than doubled. I mean, let's look. I mean, another again, people talk about bonds, but again, if you look at the 10 year, I mean, it was at what 2.1 roughly. So again, there's nowhere to park your money where you're truly safe these days, and that's a big problem. I mean, the traditional advice is bonds, but again, like I say, bonds have gotten killed. Now again, if you can buy the bonds yourself, that's better, but then you have to hold it to maturity, and you're still getting killed by inflation. This is the other thing too, is that yeah, you get your guaranteed 3.0079% return, but when inflation is 8%, and again, real inflation's probably double that, you're getting killed, right? So the problem nowadays is that if you want to maintain your purchasing power, you have to take risk. Like there is no way around that. Now, again, you got to pick your poison. Is it real estate? Is it crypto? Is it the stock market? It's definitely not bonds, right? It's definitely not bonds. A lot of people would say gold, but again, if you look at gold, I mean, let's look at gold over the last. I mean, if you 5 years, it has done relatively well. But if you go back 10 years, I mean, it's basically flat. Even if you go back to, I mean, 2011, it peaked at about, looks like just over 1,700. So gold has done decent. I think gold will do all right over the long run. But um, not as good. I don't think it beats. I mean, it probably keeps up with inflation, I guess is probably a good way of putting it. But I think Bitcoin beats inflation easily over the long run. Not even close. Bitcoin, I think, will beat the stock market easily over the long run, even the Nasdaq, right? So where is the safest place to keep your money short term? Well, nobody knows. Then there is no truly safe way to have your money in the short run. Over the long run, I think it's going to be commodities, and it's going to be the most profitable, high quality companies that have very strong cash flow, stuff like that. Real estate, comes with its risks, obviously, that are different than the stock market. But I mean, if you look at the way things are going, if governments continue to overregulate, well, real estate has to do well because we have massive amounts of immigration in the States and in Canada, and if that continues, then the demand is going to keep outstripping supply, which means the prices will go up. Same goes for oil too. Like, um, I don't know if a lot of people are predicting like $200 oil, which I could definitely see, but I mean, if Canada and the States continue to insist on not turning on the taps and producing their own oil is going to have to stay high, right? If the Russia situation continues, which it's looking like it will, and even if the thing with Ukraine ends, I think this tension with Russia is still going to continue. Oil and natural gas and stuff like that, it's going to have to stay high, right? So, in my opinion, the place where the money is going to be made over the next 10, 20 years, which is what investors should be worried about, is crypto, specifically Bitcoin, right? Again, 99.9% of cryptocurrencies are, over the long run going to lose money, right? The only one that I'm 100%, well, not 100%, but the most confident in is Bitcoin. Um, I think Ethereum will always be around just because it already has such a good footing, even though it has its issues. If you want, I mean, if you're looking at what is probably the most quote unquote safe thing, it depends on what your opinion of that right now. It's probably tips, to be quite honest. I mean, if you look at this isn't the actual yield. The actual yield is like 5.5 or 6 or something like that. But tips are probably the most safe thing right now just because they track inflation. But again, the problem with that is that the actual inflation number is significantly higher than the government one. So if they say they're going to give you the rate of inflation, then the problem with that is that you're still losing. So um, what is the solution right now? Well, I mean, if you look at the data over the long run, if your goal is short term, well, go ahead and be worried about the short term. But for most people, the solution is simply you need to hold, right? If you look at a long term chart, I mean, let's go back here and look at a long term chart of the stock market, like right here. Um, you know, Over the long run, it goes up. Now, again, what's going to cause the stock market to go back up? In my opinion, we're going to have to wait probably till the Fed stops raising rates. Now, here's the thing: the market has already priced in these rate hikes. So, um, the minute that the Fed says they're going to stop raising rates, chances are that's when the market turns. But again, nobody has any idea when that's going to happen. That could be tomorrow, given how bad things have been lately, or it could be a year from now. Nobody knows. But if you look at the long term data on rate hike cycles, typically once rate hike cycles start, if you look a year or two down the road, the vast majority of the time the market's up. So, and people say that doesn't really make sense, but the reason for that is that the market prices it in ahead of time. Like most of these rate hikes are already priced in ahead of time. The reason the market's going down now, in my opinion, is you have a lot of volatility, and you have a lot of unknown, right? The Russia situation, the midterm elections, you have inflation, you have a lot of unknowns right now. I think that's my opinion and why things are going down. So anyway, I just kind of wanted to give an update on that situation. So if you like the video, hit that like and subscribe, and stay tuned for more.